Hey guys, just the end of week 12 of trading. This week has been crazy. We got a lot of different trades, unlike last week where there's just not a lot of movement in the market. Also, this would be the last weekend of quarantine, so I'm happy because of that. Think about all of the mustache and the beard and the hair that I've grown just from this week alone has been absolutely crazy. I'm also testing another strategy called the London Open Breakout Strategy. Gonna run that test for another 1 month or so to see if it's viable in the markets. But once it's good, once it's okay, once it's acceptable, meaning the risk loss ratio is good as well as the win rate, I'm going to implement it into market with real money. So these will be the two strategies in the future that I will be running with. But right now, we're going to mainly still focus on the bank trading strategy, identifying levels at which smart money enter so that we can piggyback their movements and enter with them as well. So this week has been crazy. Given the high amounts of volatility in the coronavirus, we had to really extend our profit loss amounts in order to accommodate for the extra implied volatility. This week has also been a week where I stayed at home. I also took a lot of thinking, a lot of analyzing, a lot of just strategizing about what I would like to accomplish in my trading dreams as well as my personal life in the next 6 months. So this is a great opportunity. So without further ado, stay tuned and let's get straight into the video.
Hello. Hello, back again to the trading recap. So from this week we took 5 trades in total: Euro USD, Euro Japanese Yen, Australian US dollar, and Australian Canadian dollar. And we started off with a balance of around, let's see, last week 6,651. This week was 6,820. So I would say this is around a 3% increase in total count. Yeah, we have to do the calculations there, but let's jump straight into the analysis. So let's go straight to the Euro US dollar chart. 1 second. Yeah, perfect. All right, let's begin. So here is the first trading opportunity we had. It was on the April the 1st. Over here, what we can see is that we can see a downtrend, right? A downtrend followed by a slight consolidation before prices go aggressively down. And this is what we call a trend setup. A trend setup is a consolidation. You see this area, a consolidation in between two directionally poised price action movements. And so once we draw the volume profile here, we can clearly see that at this level there was really strong high amounts of volume. So what does this mean? You see prices after consolidating spiked aggressively downwards. This goes to show that sellers are pushing the prices downwards, and as prices come back up, they would be defending their positions right here because they have a lot of sell orders. If it goes beyond this, it's gonna trigger their sell order and cause a loss, right? Because those are institutions who are placing their orders, so therefore price would inherently turn down and go downwards. Now, unfortunately, it was a loss because we were supposed not to take the trade. The reason for not taking the trade is because, as you can see, based on the rule, we have a pin bar here, and usually a pin bar signifies indecision or just general weakness in its price action. And due to it being having tested our level, we did not take this trade. However, prices broke off this level in a really strong manner. So you see this level, we broke out off really strong, and I thought that as price came back down, it's going to retest this level and go higher. However, It did later on, but the prices went further down, and that was when I took a big loss. It was a loss of around $201. So this was the unfortunate thing due to the high amount of volatility. But anyways, this was a loss. This was a loss in the first of April, right here. Yeah, this was a loss. Total, I lost around $210. But the subsequent trades were winning trades. So let's jump straight to the Euro Japanese Yen. Alright, so Euro Japanese Yen. Over here, if we go back to the price action history, right here, yep, perfect. You see this consolidation level before prices went all the way back up? This is where buy orders were accumulating. So if we draw a chart based on what happened during that time, there was a large amount of volume placed at this level, 118.15, and so we believe that as price comes back down to this level, it's going to go up. So looking at this level right here, bounces off, went up. In reality, price should have been at 118.26. However, I accidentally put it at 118.14, which I caused it to miss this trade, and therefore only won a $14 profit. So not too big of a profit, but this was supposed to be a real profit winner, but I just missed it, and it wasn't that good of a trade, I would say. Next one, Australian dollar USD. Okay, as you can see right here, Australian dollar US dollar, there was a slight sideways price action right here before strong accumulation, selling price accumulation, right? So selling accumulation before the actual selling occurred, large amounts of volume at this level right here. So we believe that as prices come down based on this huge amount of selling activity, when it retests this level, it's gonna go all the way down, and it did. So afterwards we had this really strong downtrend over here, but a lot of people were wondering, why did this candle wick occur? In 1 minute the price moved by 100 pips. Well, this was during the release of the ISM manufacturing report, and due to coronavirus incident, a lot of people were thinking that the dollar would be very, very weak because of poor ISM results. So what did they do, right? Because they were expecting a very poor ISM result, whereby the forecasted result is a lot worse than the actual result. So what did they do? They put a lot of sell orders on the they put a lot of sell orders on the dollar right here. And so what happens was that when they realized that when the actual results came out, which wasn't that bad, which was actually better than forecasted, prices shot all the way up. And what happened? Well, all these sell orders that were placed had to get stopped out, right? They had to get stopped out. So when you place a sell order and when you stop out by buying your original order that you sold, right? And so by doing that, you cause a large amount of buying activity that was immediately triggered, and this causes this candle wick to form. But then prices immediately rebound back to its original level because it was just a short squeeze. This is what we call a short squeeze, if you guys don't know. yeah, but you can just go check it out. Short squeeze. All right, short squeeze. We waited for the squeeze to end, came back to the original level, shorted this, and went from 0.6125 all the way down to 0.6061, which was a 65 pip winner. But we did not take a 65 pip winner. We only took a 20 pips winner, and we got $225 as a profit. Now the last trade of the week was Australian Canadian dollar. See, Australian Canadian dollar, if we go back to the past, it was a consolidation right here, right? And so taking the volume profile, we identify the strongest volume, we draw the level of the strongest volume, and then we wait. Price comes back, retests this level, bounces all the way up. You see how accurate this level is? You see how accurate the system is? Just look at the top right here. We have the day of the drawing, 1 day, 2 days, 3 days, and 4 days. On the 4th day, it retests this level and produced a winner. This is not a reactive strategy where you just place an order when the signals are in line. This is a predictive strategy where we predict which levels prices would respect and turn the other way. Not a lot of people trade like this, and that's what makes it so powerful, because there was a trade I remember so clearly that it was drawn 40 days before the trade actually took place, and it still respected the level. So predictive strategy is always the best strategy, I believe. We are predicting where prices would test and produce a reaction that's based on our likings, and that's based on the direction of our prediction. So that's just a really, really powerful strategy, and that's how you actually should trade, by following smart money, by following what the big banks and institutions are doing. That's the only way in order to make money. So I hope you guys enjoyed this video. This is pretty much it. If you guys have any questions, comments, leave it in the comment section below. I hope to see you guys soon. Ask me questions if you want. I would be happy to answer all of them for you. Peace out.